Yo, what's going on, guys? Welcome to my first video on YouTube. I've got everything set up properly now, so these videos should be quite informative for you. Today I'm just going to start off with three companies that I've currently invested in with my own money. They're my three of my top four holdings in my portfolio, which make up probably around about 30% between them. So I've made a big bet on them. They are Verizon, Alibaba, and Bristol Myers Squibb. To start off with, we're going to start off with Verizon, what I believe is a great company and something that shouldn't be overlooked. Firstly, we're going in here. As you can see, we've got a 12 PE, which is absolutely brilliant in this market. Just in comparison, the S&P 500 is at around about a 33 PE right now, so it's like a third of the actual price to earnings of the S&P, and it's been around that all year. It's kind of traded sideways, which is brilliant. Um, and the forward PE is actually 11, which is, if I believe, is about 10% over the 5-year average for Verizon. Uh, Things why I like this stock, when everything went mad in March, this stock didn't plummet 35% like the rest of the market. It actually only went down by 15%. That sound that's still a big drop if you sat looking at your portfolio, but you've got to realise that if you can hold a stock, the ability to hold a stock is the ability to control your emotions. So if my stock went down 15%, I could probably stomach that, whereas 35%, you'd be a bit more panicky. Another reason why I like to hold this stock as well is because it's got a really low payout ratio for its dividend. It's hovered between 45% and 50% for the past 10 years. And they've actually said in the annual report, which was last released around December time, that they have got a goal to make it into a dividend aristocrat, which is, it's just brilliant. The dividend yield's 4.4%. It's got a good PE, and they've just recently finished the band auction for the 5G. So there's actually a growth catalyst in there, which means that they can actually kind of kick on with some growth, because the growth's been relatively flat. It's a stalwart. It's kind of slow growing, but this could really kick on because they were the ones who took up the most share at that auction. So they're going to be the highest 5G provider of the telecom communication bracket. And of course, there's always the fact that Warren Buffett's put in, nearly 9 billion into it. So what isn't there to like? And it takes advantage of compound interest with that 4% yield. So next, this company has been absolutely battered. I cannot explain to you how happy I am to pick up shares at these levels. Alibaba, I think everyone, come on, near enough everyone's used it. Uh, this is where your average discount stores will get all of the Chinese uh, items from. So things such as like Lazy Spa hot tubs, you've got wireless earphones, you've got cutlery. They're taking up a lot of market share, and they kind of took a bit from Amazon in the Chinese sector. Um, Things I love about this company, right, is the growth of this company is unbelievable. They've just released the the first or second quarter earnings for no, sorry, first quarter earnings for this year, and they reported a loss, and everyone kind of freaked out. As you can kind of, if we highlight, it's kind of around about here. Everyone kind of freaked out. It tested as resistance on this downtrend, and then it popped down from there. Everyone freaked out about them reporting a loss, but the loss wasn't actually kind of presented properly. It's because they've been hit by an antitrust fine. The antitrust fine was about 18 billion in the Chinese currency, 8 billion, sorry, in the Chinese currency. And it's just completely wiped out the EPS for that quarter, and everyone's kind of um, freaked out. But when you delve a bit deeper into that quarterly report and you take away the fine and you strip everything back and you look at the segments, everything is growing rapidly. Revenues are up for this company 64% year over year. Where can you find something with an 18 forward PE, a current 18 forward PE, a good price to sales, good price to book ratio, and I look at that price to free cash flow ratio with low debt at this sort of price, I don't see it. You've got a backdrop for this company is absolutely brilliant. It's growing perfectly. You've got a cheap valuation, and the GDP growth and the retail sales in China have been very, very strong. So I think you've just got to buy this. There's nothing to really be scared about. It's just a classic example, as Warren Buffett and Charlie Munger would say, of pessimism in the market. And I think this is something to be on your watch list. It's at a really good support level at 209 now. If you actually break it down on your chart yourself, this isn't the most accurate. But if it does break that to the downside, I think there will be more margin calls and kind of selling to the downside. So I'd take a nibble at this level. I'm averaged in at 219. I've got a good fair few shares there, and it's something that I'm looking at, and I'm actually thinking this could be one of those that, give it 5 years, if you long term think, it could double. You could get to that 400 level, especially with the revenue growth, because that is what drives the stock price over time, over short term pessimism. So just honestly, just have a look at Alibaba, do your own due diligence on it, but I think it's growing rapidly and it's got a very insanely cheap valuation for where it should be trading at, due to antitrust fines, which are just going to be one off. They're not going to be recurring, so it's not a problem. It's a short term problem, which leads to short term pessimism, which creates a buying opportunity, in my opinion. Next, Bristol Myers. Wow, this one has been getting stick off the CNBC for honest, I don't know what reason. This the CEO of this company has got a brilliant track record. Um, the acquisition they've made last year, which is what's been reflected in this EPS here, which they paid out in all out cash, no debt coming from it, a cash acquisition, has forced EPS of this stock to plummet. That, to the naked eye amateur investor, when you look into it, you think it's not profitable. However, when you factor in the acquisition's projected earnings and the fundamental company's projected earnings, you get a 4p of 8, just over 8. It's brilliant, and it's trading sideways, which is even better. So again, that is something where you've got to look at and you've got to think, what isn't there to like here about Bristol Myers? I mean, healthcare has been stupidly undervalued, and just to top it off, inflation fears are running rampant, right? We all know this. Inflation fears running rampant through the markets. One day it's inflation on hot, sell off, and then it'll kind of fade away. Something else will come into the news, and then back again, and then the CPI numbers will come out and all that type of things. But healthcare has, over the 100-year period that's just passed, has outperformed gold as the number one inflation hedge. Right, this sounds like I'm lying, but actually go and research it yourself, and I know exactly why Warren Buffett has took his positions in Bristol Myers, Merck, and AbbVie, the three top drug pipelines. You've got good growth, low price to earning multiples, decent dividend yields, growth between them. But Bristol Myers Squibb seems to be the one that's trading at the cheapest valuation, in my opinion. The debt to equity is on the low side for a healthcare. As you can see, it's only 1.23. It's on the low side for a healthcare stock, as they need to invest heavily into the drug pipelines to obviously progress with blockbuster drugs. But these three stocks I'm looking at in a minute, I think the market is just completely just brushing them off, and I think it's kind of a phase where you can start accumulating your shares. I think a lot of the hedge funds and the CNBCs it's all about the Palantirs, the Teslas, the snowflakes and all that type of stuff, chasing speculative, as Charlie Munger would say, your speculative booms. But these companies will help you sleep at night. They're not going bankrupt anytime soon. They're profitable, and they're growing. As well as all three of these companies have got billionaire backers. So, for example, Alibaba, you've got Charlie Munger, Ray Dalio, Bristol Myers and Verizon, you've got Warren Buffett. So these companies actually should be on your watch list, in my opinion. And I think you need to kind of look at them and see where you feel they're going to trade at and do your own due diligence. But other than that, that's going to be my rundown of these stocks. All the bits and bobs and the statistics are on the screen for you to look at. And thanks for watching and taking the time to, listen to this waffle. And hopefully I've give you something to go away and look at, because we're in a really, really overvalued market at the minute, and it's impossible, as as I've found out through hours of looking, to find something of value. And these things are what I think are reasonable picks at the minute at these valuations, and could help you sleep better at night, with two of them paying a nice decent dividend yield to keep providing you with a steady cash flow in amongst all this chaos. So if you like it, like everything that I've done today, just drop us a like, and subscribe, and just let me know what's going on with your stock picks, and leave a comment, and hopefully I'll see you in the next one.